Welcome everybody to the weekend update. Today is Sunday, October 4th, 2009. And what we're looking at here is a daily chart of the Emini S&Ps. In fact, this is the same chart that I had up last week, and I have not changed any of the lines that I drew, and I have not changed any of the indicators. We're looking at the exact same chart that was up last week. Just to make a point, we talked about how the market had overextended itself to the upside, and what we were looking for was a healthy pullback towards the trend line. At that time, we talked about the 1018, 1020 mark to test the 50-day MA, and also just a little poke below the upward rising trend line. That's precisely what we got this past week. Market continues to be somewhat overbought, and we saw that by looking down below at our momentum indicators. Basically, I like to use the ADX as a pure indicator of strength or weakness in the market on the daily chart. What we can see is, for the first time in a little while, the DI minus has overtaken the DI plus, telling us that the sellers have now gained a little bit of control of this market. And we can also see how the pure ADX strength indicator is starting to rise. So not only have the sellers grabbed hold, but they've done so in a fashion that indicates that they're using more sell side pressure than the prior buy side pressure. So that's what it looks like on the basis of a daily chart. But of course, as day traders or intraday traders, we need to scale down to a faster time frame and see what this is telling us and how we're going to take advantage of this information on a faster time frame. So let's move over to a 30-day chart. I'm sorry, 30-minute chart. 30-minute chart of the E-mini S&Ps. And the thing I want to point out here is, as we know, markets don't move in a single direction. They ebb and flow. What that means is we'll have a strong down move like we saw over here, and the market will retrace a portion of that. We'll have a strong down move like we saw over here, and then the market, again, retraces a portion of that. In market profile terms, this is what we call filling in single prints. In other words, the market doesn't continue to move in one direction. It moves in a direction, it leaves what we call single prints on the market profile curve, and then the market retraces in order to fill up those single prints. We saw it again over here. Strong down move, and then the market comes back and retraces the vast majority of those single prints. Well, if we're going to continue to use that theory and that concept of market profile, we can see how this last move over here, which started roughly at 1,050, comes down to roughly 1,030 before pausing, and then has next leg down to this 1,015 area. Well, looking at that, we can see how we have not retraced a significant amount, and in fact what that's done is left us a lot of single prints. Again, we're talking about market profile theory, a lot of single prints in this area between 1,030 and 1,050. That doesn't mean that I'm bullish on the market. Prior slide I showed you the daily chart and how the bears have just now grabbed hold, and I'm still looking for a flush down to that 981 area. Again, not talking about being in a bear market. I'm just talking about the natural ebb and flow in different time frames, and I would expect the market to come back, retrace down to that 981 area before moving up. I'm putting in new highs. So the same thing on this 30-minute chart. We have left a lot of single prints on this move down to, we'll call it 1,012 is the low print. But if we look at the congestion area over here, roughly that 1,020 area, which tells us if we can just break above this prior congestion, roughly call it 1,025, 1,026, that puts us in single print territory. The market can retrace a great deal of these single prints, potentially back up to 1,050 before moving back down again. So we have a situation where on the daily chart it's telling us the market is now in fact looking to move lower, but before it does, it's absolutely normal and natural for it first to attempt a rally up and fill in the single prints from market profile theory, and we'll be able to see whether or not that rally will hold by doing what we always do, looking at our momentum and strength indicators, the ADX, DI minus, DI plus, to see if that move or rally back through the 1,050 area to fill the singles is in fact on strength or in weakness. Thanks for watching our video. Please be sure to stop by thetradingzone.com for all your trading educational needs and live trading every day.